Xerox was founded in 1906 in Rochester, New York as the Haloid Photographic Company. It then changed to Haloid Xerox in 1958 and then to Xerox Corporation in 1961. Joseph Wilson was the founder of Xerox and took over Haloid from his father. Xerox became an innovator in reusable and quick-developing printing. Xerox Corporation introduced the Xerox 914, which was the first plain paper photocopier and was developed by Joseph Wilson and John DeSauer. By the end of 1961, the Xerox 914 model had generated almost $60 million in revenue. The Xerox scandal involved 6 top executives: Paul Allaire, former CEO; Richard Thoman, former president and COO; Barry Romerel, former CFO; Philip Fischbach, former controller; Daniel Marchibroda, former assistant controller; and Gregory Taylor, former director of accounting policies and assistant treasurer. So what happened? Well, the 6 executives used abnormal accounting devices that violated the GAAP principles in order to accelerate the recognition of equipment revenue and increased earnings from leases of Xerox copiers that were historically recorded in future periods and did not disclose any of this. This in turn showed the company's financial position to be way more lucrative than it was, and the defendants used excess or cushion reserves and income from tax refunds to fill the earning gaps that were in violation with GAAP. The settlement for the Xerox scandal included all 6 executives that agreed to pay over $22 million in penalties, disgorgement, and interest. The SEC imposed an officer and director bar on Allaire for 5 years, Thoman for 3 years, Romero was permanent, and Fischbach was 5 years. The SEC required executives to pay civil penalties. Allaire was $1 million, Thoman was $750,000, Romero was $1 million, Fischbach was $100,000, Marchibroda was $75,000, and Taylor was $75,000 as well. To the right, you'll see the disgorgement and prejudgment interest table that shows what each of the executives paid out. They also relinquished deferred bonuses. Fischbach's was $127,035, and Marchibroda's was $50,228. Romero and Taylor have agreed to suspension from appearing or practicing before the SEC as an accountant. Romero's is a permanent suspension and Taylor's is 3 years. What's different about this accounting scandal is the auditor, KPMG LLP, actually got charged just as harshly as Xerox did. The SEC charges KPMG and 4 of KPMG's partners with fraud in connection with audits of Xerox. KPMG LLP has agreed to settle the SEC charges against it in connection with the audits of Xerox Corp. From 1997 through 2000 for $22 million as well. KPMG was aware that manipulative actions taken by Xerox to improve revenues and earnings were happening, unnecessary, inadequately tested, and distorted the true financial statements. KPMG did not demand that Xerox justify the reasons for departures from historic accounting methods or establish the accuracy of the new manipulative practices. Xerox ignored their concerns, which were seldom voiced by KPMG, and continued manipulating its financial results. KPMG then knowingly set aside their reservations, failed as auditors to disclose the issues, and gave a clean bill of health to Xerox financial statements, which is insane. In the end, Xerox and its executives paid over $22 billion in penalties. They employed a new auditor, restated revenues of $6.1 billion in equipment and $1.9 billion in pre-tax earnings. Due to the financial toll, Xerox in turn had to sell off some of its assets and laid off thousands of workers. They also brought in a new CEO, Ann Mulcahy. KPMG paid $22 million as well in a separate settlement with the SEC and was required to make some changes and reforms. These included examination of an audit client's justification for using accounting principles that departed from GAAP, examination of an audit client's justification for departing from its existing accounting system in favor of making material period-ending adjustments, reviewing and documenting the change in authority, reassignment, or termination of an engagement partner with an audit. They were also required to establish a whistleblower channel of communication within KPMG to enable any member of an audit engagement team to express concerns on a confidential and anonymous basis. And this concludes the end of my presentation. Thank you.